stock slip with the Nifty falling below the 19,750 level. Healthcare and IT see some gains while most of the other sectors dragged.
Tata Technologies marks Tata Group's smashing return to the primary market after a 20-year hiatus, with a 3,000 crore offer being fully subscribed in just 2 hours. Fedbank Financial Services, Flair Writing and Gandhar Oil Refinery IPOs also hit the street today to raise a collective sum of over 2,000 crores.
The government has withdrawn the request for proposals from valuers for IDBI Bank. It is expected to float a new RFP after revising the criteria to draw a better response. Now, the move is seen pushing back the bank's strategic divestment.
And the RBI Governor Shaktikanta Das says that the monetary policy needs to remain watchful even as the moderation in core inflation is noteworthy. He says shocks from food prices and global developments are the big risks to inflation.
And Sam Altman, back at OpenAI, reaches an agreement with the company to return as CEO less than a week after he was fired. Now, the move follows immense pressure from employees and also investors on the board that really ousted him less than a week ago. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar. With me is Sonia Shenoy. Hi, Sonia. So the market is looking weakish today. In fact, 19,800 level is becoming a weak spot for the market and is finding it difficult to hold at those particular positions. Though the good news is that it's off the low point of the trading session, has tried to make some recovery and at the moment is losing about 58 points at 19,727 levels, which is down close to 0.3%. If you really look at the contribution for Nifty 50, the banks are the biggest draggers: HDFC Bank, Kotak Mahindra Bank, ICICI Bank and IndusInd Bank. All these 4 banks put together are basically the maximum drag that Nifty 50 is seeing. But we cannot take away from the fact that mid-cap universe has also now gone down and in fact is looking slightly weakish from the flattish sentiment that it was showing some time back. But definitely overall, it's red on the screen and Bank Nifty is the one which is the biggest dragger. Advanced decline ratio also in the favor of the declines today, Sonia.
Absolutely. So, there are a couple of things which are important, right, today. One, of course, is that overall the market is not too bad. We've had almost a 1,000-point run-up from the lows that we saw in the month of October. So, given that situation, it's not such a bad outcome. It's just about consolidating. But yes, the Bank Nifty is the one that's exerting a bit of pressure on the market as we speak. And just pull up the Bank Nifty, 415 points lower now. In fact, that has been the case for the last many weeks as well. The Bank Nifty is just refusing to provide any kind of support to the market at the moment. But given all of that, there has been a flurry of IPOs on the Lal Street, so that is perhaps sucking a bit of liquidity as well. 6 companies are planning to raise over 7,300 crore rupees in total. The IPOs include Tata Technology, Flair Writing, Fedfina and Gandhar Oil, all of which opened for subscription today. Hormuz is joining in with the details. Hormuz, what are you picking up?
Well, it's been a while, right, since we saw so many IPOs opening up for subscription at the same time. And that takes you back to the IPO mania of around 2021 when there was a flurry of IPOs. And we'll go to that in a bit. But as you mentioned, that there are 5 IPOs that are currently open for subscription. And yesterday we saw the first PSU IPO in over a year and a half, which was IREDA. That IPO was fully subscribed on the first day. Today, we've seen the first Tata Group IPO in 20 years, which was Tata Technologies, and that saw a stellar response. It was fully subscribed within the first hour as bids opened. And we also have the IPOs of Gandhar Oil, which is also fully subscribed, Fedfina, which is nearly fully subscribed, and even Flair Writing, which has also seen full subscription already within the first day of bidding. Now, when it comes to 2023, we are nearing the mark of 50 IPOs. We are currently at around 47. That compares to the 40 IPOs that we saw in 2022. And as I mentioned, the flurry of IPOs we saw in 21, when we had around 65 IP companies hitting the primary markets. But so far, in 2023, companies have managed to raise around 40,000 crores to the IPOs. But despite having fewer issues last year, the companies had managed to raise 65,000 crores. And that number is also disproportionate because last year earlier we had LIC's IPO, which was already a 21,000 crore IPO in itself. Now let's take a look at the IPOs that are currently open. As you mentioned, Tata Technologies, the first Tata Group IPO in over 2 decades, open for subscription today, will close on Friday. Already fully subscribed, a price band of around 475 to 500 rupees, an implied market cap of over 20,000 crores, and that will be the response to that over the next 3 days will be watched out for. Next up is Fed Bank Financial Services, or FedFina, which is a unit of Federal Bank that has also hit the primary markets. That will also close over the next 3 days. The price band is 133 to 140 rupees a share, and which is also a fresh issue of 600 crores, and the expected market cap is set to be just over 5,000 crore rupees. Now, Gandhar Oil Refineries, the IPO is fully subscribed already. The plans to raise around 500 crores through a fresh issue and an offer for sale, and the price band is around 160 to 169 rupees. And it is one of the largest manufacturers of white oil by revenue in FY23, and among the top 5 players globally in terms of market share in FY22. And lastly, Flair Writing Industries, that IPO is also fully subscribed now. Price band of around 288 to 304 rupees a share. The 593 crore IPO, again a mix of fresh issue and an offer for sale, and it plans to utilize the proceeds from the fresh issue to set up a new manufacturing facility in Valsad and a capex to order new machinery. However, in its risk factors, that it has mentioned that it has not yet placed those orders for the machineries, and any delay would have a substantial impact on its financial performance. So IPO frenzy clearly, and as you said, maybe sucking out some liquidity from the market as well.
That's right, Hormaz. Thanks so much for accounting for us all the IPO buzz that is taking place in the market. And biggest of all, the Tata Tech IPO, the first issue from the Tata Group, a large conglomerate in over 20 years, has opened and has been fully subscribed in the first 2 hours of the issue. Reema Tendulkar is right here with more details on this particular issue. Reema.
Thanks so much for that. There is so much excitement surrounding this one. First, let's get to the detail. The IPO opens for subscription today, closes on Friday. The price band has been set at 475 to 500 rupees per share at the upper end, which translates into an overall issue size of a little more than 3,000 crore at the upper end. Now, this is an entirely offer for sale issue. The big beneficiary from this offer for sale will be Tata Motors, the promoter entity, which will rake in about 2,300 crore, and the other sellers include Alpha TC Holding and Tata Capital. Now, yesterday, the company raised 791 crore rupees from anchor investors, which included top domestic and foreign investors like Aditya Birla Mutual Fund, Nippon Mutual Fund, Sundaram, Mirae, and foreign investors like Fidelity, the Government Pension Fund Global, and even Goldman Sachs. Now let's move on to what the company does. Now, this company provides engineering and R&D services mainly to the manufacturing verticals like automotive, aerospace, and construction heavy machinery. Amongst these three, it's automotive, which contributes to the majority of the revenues. Let me give you an example to explain the kind of work the company does. Now, for Tata Motors, it helped convert their existing ICE vehicle into an electric vehicle. So the project involved complete ownership for design, packaging, and integration of EV components like battery, motor, charging socket, and respective electronics in the base car. Now, moving on to the financials. The annual revenues of this company were about 4,400 crore rupees as of FY23. Growth rate steady, 28 to 29% in the first half of FY24, about 24% in the year gone by. FY21 and 20 growth rates we're not considering because they were affected by COVID. Margins for the company have been fairly stable, ranging between 18 to 19% for the last 2 years, but they have improved from about 16.2% 3 to 4 years ago. And the management is in fact guiding for incremental margin improvement from here on, and their goal is for 20% plus margin. Now, moving on to their client base, marquee client base, but there is a dependence on anchor clients. Their anchor clients are Tata Motors and JLR, the other two big Tata Group companies. In fact, nearly 40% of its revenues comes in from these two clients. But it also derives a very large share of revenue from their top 5 clients, especially in the services segment, which stands at 73 and 71% of revenues in FY23 and first half of FY24 respectively. So any weakness in their top 5, their large client base, can hurt the performance. Cash in the books is solid at $150 million, and the IPO, moving on to the valuations, is being offered at a discount to listed players. Now, Tata Tech is being offered at 32 times FY23 PE, while LTTS and Tata Elxsi are much higher. And top of the list, you've got KPIT, which was actually at 80 times last year's PE multiple. Back to you.
Thanks a lot for that. Well, it's already too late, right? The Tata Tech IPO was fully subscribed within minutes of opening for subscription. So that's the kind of, excitement and interest that this one has seen. Thanks a lot, Rima, for putting that into perspective for us. Now, of course, you'll get to buy the stock post-listing. But take a short break on that note. When we return, we'll get you more news and updates. Stay tuned.
Welcome back. You're watching Business Lunch. All right, let's take you to a CNBC TV18 exclusive. And sources do tell us that Bharti Group has started an IPO process for one of its subsidiary companies. Now, here the exclusive that we're gathering from sources with direct knowledge. Bharti Airtel has 70% stake in its subsidiary, which is Bharti Hexacom, and 30%, remember, is held by the government-owned TCIL. Now, to give a part or full exit to this government-run company of 30% of their stake, Bharti Airtel has now taken a decision to go ahead with the IPO plans of this particular subsidiary. Now, Bharti Hexacom valuations, as per the expectations that we gather from sources with direct knowledge for Bharti Hexacom from Bharti Airtel, is pegged at around 20,000 crore rupees. Now, remember, in terms of its operations, the company runs the telecom services for Bharti Airtel in two regions, northeastern region as well as the Rajasthan circle. And we do also gather that in order to kickstart this particular program, IPO process, they have also hired some investment banks. When we reached out to Bharti Airtel, they did say that we keep evaluating various options and would be notified once some decisions are taken, Sonia.
Okay, so clearly it's IPO season, right? One more IPO for the Bharti Airtel subsidiary.
And for the conglomerates as well, we have been saying that conglomerates are now, after a decade or two, coming up with fresh listings. Tata Tech is the big news today.
Absolutely.
And also GSW Infra listed, and now Bharti Group has a new IPO after Bharti Infratel listed in 2012.
And Fedfina as well, right? That's another one from the Federal Bank Group. But let's move on. The government has cancelled its bid to appoint an asset valuer for the divestment of IDBI Bank. Sapna joins in with more details on all that she's picking up. Sapna, over to you.
Well, a bit of a setback here, but maybe short term. So first of all, after 4 extensions to the timeline for receiving bids for the appointment of asset valuer for IDBI Bank's strategic disinvestment, the government has now finally called it off. And the reasons are pretty much clear, as we had reported earlier in the day, also in the morning, that there can be only 2 reasons. Either there is disqualification on technical grounds, or the bids are insufficient in number. And that's exactly the point. A single bid had been received so far, despite 4 extensions given. And so the RFP process currently has been called off, but the government has made it very clear that they are going to review some of the criteria for the appointment of the asset valuer, probably, some rejig in the net worth qualification or some other technical grounds that they always have. And once the criteria rework, the RFP will be called again. So that's one. Now, second, we need to understand the larger perspective of the IDBI Bank strategic disinvestment. So, parallelly, the RBI process for fit and proper is still on, and they are in touch with the foreign jurisdictions as far as those EOIs which have come in. So all that fact check is still on, and it's a long drawn process. That's one. So process is in place. However, the DIPAM secretary, Mr. Tuhinkanta Pandey, sometime in this month, if I'm not mistaken, 16 November in Bombay itself, I think he had indicated very clearly that it's unlikely that the IDBI Bank transaction will go through in the current financial year. So in that sense, the government has room and a headroom to try and work out all the other procedures, let them fall in place, and probably next financial year is when you can expect this to go ahead.
All right. Thank you, Sapna, for getting us all those important information on IDBI Bank's disinvestment. And on that note, we'll slip into a short breather on Business Lunch. When we return, we'll get you all the latest news updates on Sam Altman's return to OpenAI. Stay tuned.
Well, the market is absolutely quiet, but there are plenty of stocks which are looking very good. CG Power, in case you missed it, is one of the big stocks of the afternoon. It's up almost 20% as we speak, locked in upper circuit. And Tube Investments is not too far behind. That one as well is up about 13%. But let's shift focus to all the news flow around OpenAI, and it's pretty much been like a movie right from the beginning. Ousted OpenAI chief Sam Altman, guess what, has tweeted that the tech startup and he have reached an in-principle agreement to return as the CEO. Remember, this comes just a day after Microsoft CEO Satya Nadella had announced on Sunday that Sam would be joining the tech giant to lead their AI team. A lot of back and forth happening with OpenAI. CNBC's Karen So has the latest.
It's been such a big week, such a big weekend, and the developments still are crossing the wires this morning that effectively OpenAI has reached an in-principle agreement for Sam to return as CEO with a new initial board of Brett Taylor, the name, ex-Salesforce CEO and ex-Twitter chairman Larry Summers, you also know that name, and Adam D'Angelo, one of the existing board members that's been part of some of the issues taking place over the last couple of days. Now, we do have a comment from Sam Altman on X. He's posted to the site saying, "I love OpenAI and everything I've done over the past few days has been in service of keeping this team and its mission together." He goes on to say, "When I decided to join Microsoft on Sunday evening, it was clear that this was the best path for me and the team. With the new board and Satya's support, I'm looking forward to returning to OpenAI and building on our strong partnership with Microsoft." So just to that point, with Satya's support, so obviously he had inked a deal recently to join Microsoft and the research team over at that company. So Satya is still having a key role here. Satya Nadella has also commented on the platform X, saying, "We're encouraged by the changes to the OpenAI board. We believe this is a first essential step on a path to more stable, well-informed and effective governance. Sam, Greg and I have talked and agreed they have a key role to play along with the OpenAI leadership team and ensuring OpenAI continues to thrive and build on its mission. We look forward to building on our strong partnership and delivering the value of its next generation of AI to our customers and partners."
All right, so that's quite a power struggle that took place at OpenAI. But our markets are recovering now. That's a good news.
It's like a roller coaster ride, right? Every day there's a new CEO that OpenAI has. So
yeah,
interesting.
but Sam coming back, that's quite a power struggle that he dealt with and won over. Let's see how the saga goes. But market on a recovery mode, especially led by Bank Nifty and some of the top banks, and Reliance Industries also seeing some pickup. All right, with that, it's curtains down, business lunch, but do stay tuned into Mid Cap Radar. Comes up next.